coming at you today with topic 16, banking systems. And so this is the section where we start to talk about financial systems and finance and the accounts department. And so we're going to start off by understanding the banking system and how the banking system works. Because there are questions when you're in an office environment and you're working maybe with an accounts department, you have to understand how the bank works, what the bank expects, and what needs to be done with certain material related to banks like checks and deposits. And so what we're going to do now is we're going to go through the banking system and how it works. And so, of course, welcome to the virtual space. Let's work together to learn, share ideas, participate, and learn something new. The wise always seeks knowledge. Let's talk about bank accounts. To first understand how the bank works, we have to understand that companies have multiple types of accounts that they have access to. And so these accounts are deposit or savings accounts, current or checking accounts, and fixed deposit accounts. And so with these, well, it's actually, they're two main because most companies have a savings account and a current account, but there's also the ability to have a fixed deposit account. And when we look at things like a deposit or savings account, the purpose of those accounts is supposed to be for the company to save and have a higher interest rate of saving interest rate than any other type of account. So the main purpose is just to hold funds, not necessarily to pay a lot of bills and write checks. A current or checking account is the account that a company can use to write checks from. And so in the business world, oftentimes there's not a lot of cash being exchanged. The bigger the company is, the less cash is actually moving around from the company to other persons. And so that means everything is coming off of their account using checks. And so checks are just written forms of payments. You're giving it to persons to pay bills, and they present it to the bank, and it tells the bank, hey, I want you to take a certain amount of funds off of my checking account and give it to this individual, whether it be give it to them in the form of cash or give it to them in the form of transferring money from my account to their account. And so if you have a checking account, that means you're going to use checks to pay bills versus a savings account. Usually you don't have checks attached to those. You'll just have to take cash off of the account, etc. A fixed deposit account is an account where a company can decide if they want to put $10,000 on the side and not have access to it or not be able to take away from it and let it just earn interest. You can get a fixed deposit account, which allows you to deposit a certain amount on your account and it stays there for however period of time you agree. Sometimes you keep the money on the fixed account for a year, 6 months, and at the end of the period of time, they give you a little interest, not much, a little interest on that balance. So you end up with a little bit more than you had. And so that's just a way of helping persons to save or to put things on the side for something else. But most businesses are going to have either a savings account or a current or checking account. And so we go into a lot of details about checking accounts because in the checking accounts, they're the most popular form of account in a business environment. And so there are three basic types of checking accounts. We have a personal account, a joint account, and a business account. Of course, a personal account usually means that that's on a single individual, one person who can write checks from their account. So if I, as an individual, wanted to have a checking account, I would most likely have a personal checking account because it wouldn't be attached to a business. Now, if I had more than one, if I wanted somebody else to be able to sign checks on my account other than myself, that would be considered a joint account where two or more persons can write checks against the account. For example, a husband and wife, their names are on an account, or maybe a partnership organization. Then what happens is two partners can sign on the account, or three partners or whatever can sign off on the account. Then finally, we have a regular business checking account. And so that's where one or more persons may write checks against account of a company or an organization. And so this type of account is the account that we're going to continue to talk about, because we're going to assume that for a business, there's going to be a business checking account. Oops. When we're opening a checking account, it's important to know that a company has to do certain things to open an account at the bank as a checking account, because there's no real cash being transferred from the business's hand to another person's hand. It's just a signed check. The bank normally has a lot of rules and requirements as it relates to opening an account, because they want to know who's signing the checks. They want to have information on the person signing the checks, so that if something goes wrong or if something is against the law or fraudulent, they know who to contact about an account. And so information needed to open an account, normally the company needs to know the name, address, and telephone number of the business or the person that's opening the account. They want to know who's opening this account. If something happens, where can we find them and how can we call them if there's a problem? They also want to know the date the account is open and who opened the account. So normally there's a form that's filled out when opening a bank account. Is signed by certain people, it's dated, and dates are very important as it relates to opening these accounts. They normally also ask you for references. When you are opening a checking account, it's almost like you have the ability to write a check for an amount that's not on your account. And so it's kind of like you can have some form of a short period of credit. You just have to a lot of persons just make sure they hurry up and put money on the account by the time somebody actually comes in to present a check for payment. And so there's a level of trust that a bank has to have with the person that has a checking account. And so in that regard, they normally ask for references, which is they want somebody to vouch that you're an honest person, that you're a decent person, in order to open a checking account, because they want to only give checking accounts to individuals that they can trust. And so if others trust them, then they more likely are able to trust, the bank is more likely able to trust that individual that's trying to open a checking account. Normally, you have to specify the type of account you want, the type of checking account, personal, joint, or business. That's a part of the form as well, too. You have authorized signatures for checks, because not just anybody can sign on a checking account. The bank normally requests to have a record of everybody that is able to sign on the account, see what their signature is, so that if a check is presented and the signature doesn't match, they know that this might be somebody trying to take money off of the account that doesn't have the access or the authority to remove funds from the account, and thereby protecting the individual checking account or the actual person's checking account. And so the bank needs to know who's authorized to sign for checks on behalf of the company. If they aren't, then they will not process the check and provide the payment. And so this is very important to a checking account, to protect the money of the person whose account is the actual checking account. And then because you have authorized signatures, they like to request the name, address, and contact persons authorized to sign checks. Like I said, in the event that there's a problem, they know exactly who to call, where to find them, and how to contact them. That's very crucial. For savings account, they don't require as much, because there's not much of a responsibility or a trust factor needed for savings accounts than there are for checking accounts, as well as credit card accounts as well. Two credit cards, normally they require a lot of the same information for a credit card, a business credit card. When we talk about checks, we have to point out that for checks, we have information like the drawee. And so the drawee, these are certain terms when we talk about checks. Drawee is the person that, let's think of when you're drawing up something, you're writing something up. If you're drawing, you're writing it up. So that's the person that's drawing the actual check or writing up the actual check. They are the person that has the checking account and they have written the check and given it to somebody else. The drawer is the bank. That is the company that the the drawee has the bank account with. And so they're gonna be the ones that are gonna distribute the funds to whoever presents the check to them. And of course, the payee is the person that we're gonna pay. So when we think drawee, payee, drawee is the person that's writing the check. Payee is the person that is being paid via check. Okay. Sorry, went the wrong way again. I have an example of a check later on that I'll show you as well too. But I just wanted to point out key information about checks. When we talk about checks themselves, there are different types of checks. We have an open check, which is a check that doesn't have any lines on it. And sometimes persons draw lines on checks to prevent certain things from happening, or to say that, the person can only deposit the check, they can't cash it, to give some restrictions to check. And so some checks, like I said, there's an open check with no type of drawing on it, no type of line on it. And it lets the person deposit the check or exchange it, carry it to the bank and get cash for it, or possibly sign the check over to somebody else. So let's say I received a check from one of my customers and they wrote me a check for $1,000, but I have a bill to pay for $1,000. And I decide that, okay, I'm going to sign on the back of this check, my signature, because the check is written to me. And then I'm going to pass it on to the person that I owe $1,000 to. Because I signed that check, they can now take the check and carry it to their bank and get the money instead of me. And so if a check is open, you're allowed to do that. And so that's why open checks are not very secure, because if I sign off on a check and I lose it, anybody holding my check, because I signed off on the back of it, can actually go and deposit the funds on their account or cash it, even if I don't want them to. And so open checks tend to be not very secure. We have cross checks, which are a safer version of payment. When you put a crossing on the check, it just says that the amount of the payment has to be, or the check has to be paid into a bank account, and you cannot cash the check, get cash for the check itself, and you can't exchange it. There's usually two parallel lines across them. So once there are two lines on the check, then that tells the banker that this check can only be deposited. And so sometimes what can happen as well, if it's special cross check, there can be words written in between the two lines that say for deposit only, or for this deposit to this account only, etc. We have a manager's check, which is a check written by the bank. So it's not written from a person's checkbook. It's written from the bank and it's signed by the bank manager. And it's a really secure way of payment, because sometimes a check can bounce, meaning that the person wrote a check for $1,000 and they didn't have $1,000 on their account to pay the bill. And so the bank is not going to give the person $1,000 or put $1,000 on their account because they don't have sufficient funds on the drawee's account in order to pay that bill. And so a manager's check is a much safer way of receiving a check because it guarantees that the person had money on their account and the check will not bounce. An endorsed check is just a check that has writing on the back. So if it's an open check, on the back, it's going to say something like for deposit only, or, deposit to this particular account only, something like that. It's just endorsed or signed at the back and giving instructions to the bank itself. A post-dated check is a check that is written for a date sometime in the future. So maybe I don't want the person to take the check to the bank until maybe another month. And so you put the future month on there when you actually want them to take it to the bank, and they can't cash it until then. Stale dated means the check has been dated 6 months in the past, and that means if it's older than 6 months, it cannot be cashed. It needs to actually be returned and a new check be written up, because the bank will not accept it. The bank will not cash it. A dishonored check or a bounce check is a check that the bank refuses to pay. And so it could be because there's not enough money on the account. Like I said, the person wrote a check for $1,000 and their account only has $500 on it. The bank is not going to cash that check. Or maybe there's something missing on the check, like there's no signature. Maybe the amounts on the check don't match. Maybe the signature is for the incorrect person. That person maybe is not an authorized signatory, or the date is just incorrectly written on the check. Those would be reasons why a check is dishonored. When we talk about endorsements, think signature. And so types of endorsements are going to be blank endorsements, which consists of only the person's name on the back of the check. A restrictive endorsement is the payee's name, either signed or stamped, and is usually restricted to be for deposit only. And then a full endorsement is signed or stamped in the back and then says paid to the order of a particular name or person. So when we think of blank endorsement, it's just signed. There's nothing else on the back. They can actually just transfer it to anybody. They can cash it if they want to. If it's a restrictive endorsement, there's some form of restriction that says, hey, you can only deposit this check. If it's full endorsement, that means that it's signed and written to the T. You can only do what it says on the back to a specific person. And so full, just think of it, adds a person's name to it. Restrictive is just that it says you can only deposit it. Blank means you can do whatever you want with that check. When writing a check, there are 4 safeguards to ensure. You want to make sure that you fill out a check register, and we'll talk about that before you write the check, so that you're aware of checks that are written by the company. You want to make sure you write checks in ink with pens or use a computer, not a pencil. That avoids somebody changing the information on the check and getting more money than they should. You're going to use a line to fill in any extra space after the name of the payee and the amount of the check to avoid somebody manipulating the check and writing something else on there to change the payee name or to change the amount of the payment from your account. And you fill in as much space as possible to provide anyone adding information. And then you sign your name after you fill out the rest of the information. So sign on the check after you have completed the check, because you don't want somebody to mistakenly get a check that you've signed and fill in any old information and steal from you or take money from you. And so, like I said, this is an example of a check. A check normally has, this is the name of the drawee. So the person whose bank account is going to be affected by you cashing that check. It's normally in the top with the address and a phone number is normally there. We have a space for the date, and you want to make sure that the date is clear, because this is where you would look to see if a check is post-dated or stale dated. Right now, this check is definitely stale dated because it's older than 6 months. The bank would never cash this check. In the corner, sometimes at the top, sometimes at the bottom, but somewhere on the check is going to be a check number. It's important for recording information related to the check in your books or the company's book or the check register. Paid to the order of is just telling me who the check is being paid to. And so if you're paying to the electric company, you're going to put electric company, the exact name of the company there, so that the company can take the check and deposit it to their bank account. If you get a check and it's not in the correct name, then you can't deposit it. So you want to make sure the name on the check agrees to who is being paid. Like they said, this is extra space here. Anybody can add, they can create a company and add another word to it. And you want to make sure any line, you can put a line here to prevent adding any false information to the check. How a check is written as well. You have check, the amount of the check is written here in numbers. Over here, the amount of the check is written in words. That's where you see the dollars. This is a space left for you to spell out 100, so 130, and 45 over 100. This is how we normally show how cents and cents are written on a check. So if this was 85 cents, it would have been on 85 over 100, letting me know that it's 85 cents. And like I said, normally there's a line that you put here to prevent anybody from trying to add any additional dollars or cents or anything on there to get more money than they should have gotten. If these don't match, then the bank will not cash that check either. So that's a safeguard. The memo section, this is just to give an idea of what the payment was for. If it's not filled out, the bank will still accept payment, but the memo section is just for you, the company, and the person that you're paying to know what the check was for. And then this area here is the signature area. It must match the authorized person that is authorized to sign on your account. All of this needs to be filled in properly for the check to remain a valid check and not be dishonored by the bank. Next, we're going to talk about deposits. And so with deposits, these are going to be funds that the company receives, maybe from customers, if they receive checks, if they receive cash, funds that are received that the company normally writes up and carries to the bank for them to post or put the money on their account. And so deposits can be made in person by taking the money and the cash and everything to the bank, standing on the line, waiting on the teller and going to the teller, having the teller take your money, look at it, and post or put the money on your account. You could also mail in deposits by sending it through the mail. Doesn't happen as frequently here. You can use a night deposit, which is, if you've ever seen those metal slots at the ATM or at the bank that persons have a key to, they open and they normally drop something in there. They're dropping deposits that are going to be posted to the accounts at a later time. They don't feel like waiting on the line, and so therefore they just drop it in the hole. And when the bank gets around to it, the bank opens up the deposits, counts everything, and then posts it to the account. So if you want your funds to go on quickly, you would normally do in-person deposits. If you don't mind it taking a while for the deposits to be posted to your account and you having access to the funds, then you can use a night deposit. That'll just save you time of going on the actual bank lines. And then now most companies allow you to use the ATM, automatic teller machines, to make small deposits without having to go to the teller itself. And so when we have deposits, there's some things you need to know. When you carry a deposit to the bank, you don't just take the money. Normally, because there's a lot of money or multiple payments being made, you have to write up an actual deposit slip. And so this is an example of a fake RBC deposit slip. Normally, you would get them from your bank, whatever bank you have your checking account with or your savings account with. You would get deposit slips that you are able to write up on. And so you would enter your date and you would put in your initials as the person who's depositing. And then what happens is, in this section, you're going to take note of everything that you deposit. So let's say your deposit, you have US funds, you have any other type of funds, you have BSD, which is Bahamian dollar funds. Let's say you have 5 $50 bills, $500 bills to deposit into the bank. 2 of them are Bahamian dollars, 3 of them are US dollars. What happens is you're going to have to identify each denomination that you have to deposit. So denomination being a single bill, the value of a single bill. On here we have we have 1, 2, 5, 10, 20, 50, 100. These are the different denominations that can be deposited. Now, we don't use $2 bills anymore, but of course we have a $1 bill, $5 bill, $10 bill, $20 bill, $50 bill, $100 bill. If I have 3 US $100 bills, what's going to happen is I'm going to put 3 next to the 100 denomination, and 3 times 100 means that in total, I have $300 worth of $100 bills. I'm going to total up, or if I have multiple denominations of funds, if I had, let's say, have $10 bills, $5 bills, I'm going to put all of that here and total up how much I have based on each denomination. And then I'm going to give a subtotal. Normally with coins, they don't let you do the breakdown. You just add up how many coins you have. And if you have $30 worth of coins, you're going to put $30 there. and give a subtotal or add up all of the denominations that I have, the value of the denominations, to get a subtotal of how much US cash I have. The same thing happens. This is not common. They normally have US and BS dollar only. So the same thing happens with BS dollar. If you have Bahamian dollars, if you have a certain amount of ones, a certain amount of 20s, and a certain amount of 50s, you put how many of those you have here, and you multiply it to find out the value of these and do a subtotal as well. With checks, normally what happens is the bank asks you to itemize or write down each individual check, number, and the value of each check that you're depositing, and then you do a subtotal of checks. Later on below, you're going to total up how many checks I have, how much Bahamian dollar cash I have, how much US dollar cash I have, and then you add all of that together to get your total amount that you're going to deposit to your bank account. And so when you go to the bank, you normally put your documents in order, your cash in order, and then you carry it to the teller if you're using a teller, and the teller will check, okay, you do have 5 $1 bills, you do have 5 $50 US bills, and they check off each of these, and then they normally give an initial, and they post it to your account so that it's available for you to use. Checks, cash goes on your account right away. Checks don't go on your account right away. So when you're collecting checks, just know that the bank holds the money for about 3 days before they allow you to use it on your bank account. All right, so that's what happens when you write up a deposit every day in a business for cash that's been collected. And so when you're preparing this deposit slip, you want to make sure write it in ink. You're not writing in pen. You make sure usually there's a space for the account number, or sometimes the account number is at the bottom. This looks like the actual check. Checks have these as well too. Sometimes the account number is there, or sometimes you have to add the account number, but you definitely have to add the date on the deposit slip. You're going to make sure you count all bills and coins to verify the total amount that you have. Turn all of your bills facing up. So you normally put them together neatly in the right direction. You put all of the denominations up and you put them together. You put all your 10s together, all your 1s together. You put it neat so that the teller has an easy job of counting your money for you. You putting your coins together. If you have a large amount of coins, you want to put them in wrappers, and then put the information on the coins, the value of all of the coins in there, or you write the name of the company on there so that it's clear whose coins these are. Once you put all your money together and you verify, you're going to write the total in the appropriate spaces here in the deposit slips. Then you're going to list every check like it says in the slot for checks. Be sure to make sure each check is properly signed or stamped saying for deposit only. That safeguards your check as well. And you make sure identify each check on the deposit slip. Any local checks, so checks from persons in the Bahamas, normally you're not charged a fee, but once it's a US check or outside of the country, you'll be charged a specific fee on the deposit, from that deposit as well, bank charges. And so once you put everything there correctly, you're going to add your figures and clearly write how much the total is, your subtotal, and your overall total of the deposit, and it should match the amount that you carry to the bank. If it doesn't, the teller will correct it or ask you to rewrite your deposit slip. So you want to make sure the deposit slip is accurate. That's it for banking systems, understanding how the bank works and what the bank expects when it relates to checks and when it relates to deposits. If you have any questions, feel free to send me that information and I'll get back to you. Happy studying. Hi, Brenda here. I just want to take the time to say thank you for choosing this course. Thank you for choosing yourself and for preparing as you should for Office Procedures BGCSE. Look forward to more from me and Business Teacher Powell, and I look forward to seeing you in other classes. Bye.